Hi everyone, and thanks for checking out my channel. I'm going to have a look at WTI crude oil, having a look at what kind of plan can be set up for next week, trying to benefit from the next move. Last week was quite successful with basically what I was looking for that did realize quite nicely. So yeah, let's go through the new setup we're having now and see what could be ahead of us for next week. Looking at the bull and bear scenario, I had to look very closely at everything, but unfortunately the bearish side is much bigger in my opinion than what is actually bullish. Starting with the bullish arguments, we can see, and it's been confirmed, that the demand is picking up. That's definitely confirmed looking at the gasoline stockpile that's been reducing in the US, so it's showing that there's more demand in terms of for transport and everything, so that's should be supporting the price. Can argue that it's probably and very likely already priced up at near $40 the barrel. Now the uptrend is still safe, so we can see on the last move we had last week, moving here on the 4 hours chart, that we are still moving from higher high, higher low, higher high, higher low, and even there when we set 41 and drop down to 37, we are still above the 34 level. That would invalidate the uptrend, so that's something to keep in mind. It's still moving up, so we need to keep that in mind and not believe that we are going down for sure because of sort of a trend reversal. That's not the case yet. Also, if we look at the daily chart here, we can see that we're still having the 20 MA in support. That's been checked one first attempt mid-June. It's a nice rebound, and then we had another one last week and a rebound at 37. So that's definitely important to keep in mind, because until that that is actually broken down, we can still have some upside from there. So I would take that as an argument into going up from here. Now, in terms of the bearish side, many things. In terms of the fundamentals, I think was expecting this to happen as we were approaching the $40 level, but the production is now ramping up in the US, not massively. I believe we jumped back near 11 million barrels a day after dropping slightly below. It makes perfect sense because the producers are still under massive pressure. The same issue that we had when the price dropped to $10, massive debt. So the only chance for them to actually get rid of that debt or not actually go bankrupt is to pay off and increase their revenue, but at that price the only chance to do that is to increase the volume. So I believe that trend will continue. We will continue to see production ramping up, and that will definitely put pressure onto the price. Now, in terms of the trading and the trader's position, we can see that's really concerning for the uptrend is the dropping open interest on the last leg up. So if we look at the quote report here, we can see that during the period up to the 23rd, got a 73k contract down in that period, which is quite a significant move from 37 to 42. So an uptrend almost very clean, but still we're having the reducing open interest, dropping open interest, and quite significantly. So definitely a big concern. We also can see, which is another point here, that the managed money are reduced long, with only 2k contract down, so that's not that many. But what we can notice that didn't actually add that many shorts, which is somehow positive because they are not actually pushing down too much, but also it means they have a lot of room to move down. So to me it's again bearish argument. Now moving on to the chart and looking a bit closer, now we're having a daily divergence and also a lower high on the daily chart. That's of course not a good sign at all. So we can see here the divergence, not extremely steep but still there. and that will actually put a lot of pressure and stop the momentum to move up much higher. And on the close we had last week, we set a temporary lower high, so it's not of course finished, you can still move higher, but still it's not something that is actually pointing to a continuation of the move. Also, still on the chart, we also have a potential for a head and shoulder pattern on the 4 hours. So I'll continue with the technicals, because there's many things pointing to a reversal that could be quite significant. But we can see here, looking on this, just change the color, but that we're having the neckline running here, moving for the head, and another neckline. So it got broken a little bit higher, so it's not perfectly neat. But if we take this from the top to the bottom here, the head is actually pointing to a correction down to below 34, and I believe that's a really fair target for many reasons. The one is that the daily divergence, we can see here, is actually clearing up somewhere there with some support arriving here. So 34, I believe, is a fair target should we actually break lower. And I give another reason for this. Just remove this, it's a bit annoying. Yes. So that we having, if you are familiar with the Wolf waves, we have a near perfect one now. If we look at the 4 hours, so drop here, 0.1 would have been there, and we're moving up here. Wave 2 moving to 0.2 here, the stream on down here, and we just made the 0.5 last week. So if we can see, that's 1, 2, 3, 4, 5, and then usually when you set the target for the Wolf wave, you take 0.1 and 4, and it's exactly pointing to a 34 level again as a target for this move. So I believe this is also pointing, together with the divergence on the daily, it's a very important figure, and usually confirming quite nicely. Now if we look at another argument as well, which is the April 2019, so about a year ago, we have a very similar configuration on the daily. So I'll just take that like this. I believe it was here, and we had that move up. Of course the environment was slightly different, but we still had the oversupply situation and the demand struggling to actually pick up with this. But we can see here, when we reach 64, and reach later on 66, we had that divergence here. That was really clear. And also the 20 MA was in support, and when it got broken, we reached the 50 really quickly before resuming a bit up and then crashing down quite a lot. So if we look at the current situation here, just get rid of these arrows there. We're having something very similar. So this higher high here, that is actually happening in a very similar manner with the daily divergence and the 20 MA in support. Should we break this, because the 50 MA is running much lower, then we are going to drop significantly and get up to the 50 MA, potentially 30, but I think 34 is a fair target in the short term. And finally, one more argument on the bearish side. I think that's probably enough to be convincing, I believe, but the S&P 500 is under clear pressure here. It's got the island reversal here that got incapable to actually close that gap, so it's a very bad sign for the continuation. I believe we are going to break the 3000 very soon. If we break this, then we are going to try to set a lower low, and 2800 would be the next move on the S&P 500. So that will bring more pressure again on WTI, because the correlation has been quite clear recently between the two. So again, another thing pointing for a break lower. So yeah, that's about it in terms of the argument. So I believe, to me, there's almost no, it's a no-brainer, but the bear scenario is the one I'm going to trade. So scenario 1, I believe we are going to break 37 next week, and I will be trading for this the following way. So there's several things that I we'll look at. First, we're having that trend line that's capping the price here. Ideally, we could see on Monday, I believe we're going to open down because of the market sentiment and everything. Then we could have some counterflow trading with some buyers trying to get some lower price here and move up. So we might have an attempt to break higher here and potentially rejecting at 39. So the way I see it, we're going likely to drop there. Keep that color, it's quite nice. And potentially attempt to break higher on the sign of reversal here. I will load shorts, keeping the stop loss potentially around 39.6 or somewhere there, just to be safe, and then expecting the drop to continue lower to 34. So it might not happen that quick and might take a bit longer than midweek, but potentially with the inventory bearish again, that could actually be the trigger for that move. Of course, as usual, I always consider the second scenario, in my opinion, very low probability, but going above 39, breaking out instead of here, returning here, we would have that trend line working once again, and the price moving up, breaking 39, and then making another attempt at 41. Should that be the case, we should have some clear signal buying here, so either positioning on the divergence on the trend line here to enter long, or potentially on that breakout. So I will consider both scenarios, and I would not trade short if the configuration is not confirmed, or if I have any doubt that it could actually break higher, because of course 41 is quite far away from that point. So should we enter short at 38 and up to 41, that's too far away from the stop loss, so careful with that. No, there's a preferred scenario, that's the number one, 37 breakdown, but I will not be trading this blindly, and we'll be looking at the chart and the price action on Monday to decide if it's still the scenario to trade and what is the safest in the current situation. So yeah, that's about it. I hope you enjoyed this video. Let me know if you have any comments, if you think that any of these arguments are not valid, or if you believe just that the bull side might actually take over for some reason I have missed, or something like this. Just please share, put in the comments, and I'll be happy to discuss. I wish you safe trading. Speak to you soon. Cheers, bye.